Today, the first half of 2024 is nearly over, with Bitcoin surging more than 40% so far this year. McMillan of IDX Digital Assets discusses what's driving crypto prices right now. And Chris King, founder and CEO of Eaglebrook, weighs in on whether investment advisors are starting to recommend spot crypto ETFs to clients. Welcome to CNBC's Crypto World. I'm Brandon Gomez. We're headed toward the end of the week, month, and first half of the year here on Crypto World. So let's break down the numbers as they stand right now. Major cryptocurrencies have moved lower over the past 24 hours, with Bitcoin and Ether both falling roughly 1% by noon Eastern. Solana took a bigger hit, around 3%. And looking at the week, well, things aren't much better. Bitcoin fell 4.9% in the past 7 days, compared to ETH's 3.3% decline. That caps off a month-long slide for the cryptocurrencies, which both fell right around 10% since the start of June, as we head into the so-called summer doldrums. If you zoom out to the first half of the year, though, things are still looking pretty good for the crypto market. Bitcoin's gained about 43% since the start of this year, and Ether's surged nearly 50% year to date. Okay, sticking with the markets, Crypto World's Talia Kaplan sat down with McMillan, founder and CIO of IDX Digital Assets, to discuss the catalysts investors should be paying attention to, spot crypto ETFs, and digital assets becoming a hot topic in politics.
I want to start off with markets because this week we saw Bitcoin dip below $60,000 for the first time since early May, and Bitcoin has been trading in the low 60s, quite the contrast from just a few months ago when Bitcoin was reaching fresh all-time highs above $73,000. So what exactly is happening with markets right now? Is part of it profit-taking after that explosive rally we saw earlier this year, coupled with the fact that typically the summer is just slower when it comes to investing?
Exactly. I mean, it's a confluence of factors. We actually wrote an article about this in early May about things to look out for on the downside as it relates to Bitcoin. And part of it is just, after a very strong Q1, Q2 for all risk assets, of which NVIDIA is kind of the poster child, there's of course going to be profit taking. And you can see that with the on-chain metrics as well. If you kind of look at recency of coins bought, those that have had more profit embedded have been selling recently. There's also been, within the Bitcoin ecosystem, concerns about Mt. Gox liquidations. So if you remember all the way back to the Mt. Gox hack, the trustee is getting ready to release, a substantial amount of Bitcoins to, those affected. And there's been some concerns, and I think some early speculation or profit taking ahead of concerns about, mass liquidations of those Mt. Gox tokens. And then, as you mentioned, kind of the summertime lull, there's the famous, sell in May and go away, which again, is kind of affecting risk assets. So I think there's, macro considerations here are kind of the driving thesis, coupled with, at the micro level, concerns about Mt. Gox.
So what catalysts should investors be paying attention to? Of course, spot Bitcoin ETFs were approved back in January. Everyone was focused on that. Then the Bitcoin halving took place in April. Now that those two big events are over, what should investors be paying attention to next? And does the upcoming election, the presidential election, play a factor in markets at all, especially because crypto is, in fact, becoming more of a political issue? Absolutely.
So first of all, what should investors be looking for? I think the next immediate one around the corner is, of course, the potential approval of this spot Ethereum ETF. That could happen as early as next week. I think that'll obviously be positive for markets. We're starting to see increased adoption among not only the investor community, but the advisor community on the back of, spot Bitcoin ETF. So I think that helps just kind of further the, quote unquote, mainstreaming of Bitcoin as it relates to, institutional portfolios. Now, the election cycle is very interesting, and I'm glad you mentioned that because, like all things, Bitcoin, of course, has also become political. And I think what's interesting with this election cycle is the emergence of, the Bitcoin PACs, the crypto PACs. And they have a lot of money, and they've been very active, and they've had some early wins in terms of kind of backing crypto positive candidates. And I think that's something that politicians are having to reckon with now. There was recently in the southern district, or in the Bronx district, a candidate there who was, kind of notoriously anti-crypto, and one of the big PACs spent a fairly large sum of money just running generic campaign ads. So crypto is a force to be reckoned with in the campaign cycle, and I think you're starting to hear the candidates kind of talk more about that. If you look at Trump, he's kind of jumped in, I think strategically on his part to try and position himself as kind of pro-crypto. The Biden White House has been a little bit more, slow in that respect. And so it'll be interesting, to see to what degree that emerges as a talking point, in the debates, as we get closer to the election cycle. But I do think, we're going to see more activity with crypto PACs starting to, aggressively, push candidates. And I think it's a good thing, frankly. I think, candidates need to understand that Bitcoin or crypto in general is a source of innovation. And if the rules and regulations aren't clear, are enforced in a haphazard fashion, that's just simply going to chase the crypto industry offshore. And frankly speaking, America is not at a point where it can really afford that.
Yeah, and expanding on that, Fairshake, we just learned, raised $160 million as of the end of May. And as you noted, Trump recently announced that his campaign would be accepting Bitcoin donations. And then the Winklevoss twins donated $2 million to the Trump campaign. Of course, some of that had to be refunded. A campaign source told me because it exceeded the legal limit.
Yep.
But it certainly is becoming more of a campaign issue. And we're also seeing crypto right now play out in politics. Sticking with politics, we have seen some regulatory advancements. In fact, last month, 71 House Democrats joined 208 House Republicans in voting yes for the Fit for the 21st Century Act, a crypto market structure bill. So what was your reaction to that development? And do you think we'll see more regulatory advancements in the upcoming year?
Yeah, I think that was, very favorable. I think, again, if you go back to kind of, a couple of years ago when politicians in Congress first started talking about crypto, it was kind of blanket statements. It's a bastion of, illicit trading, and it was, very unconstructive, kind of, overly simplistic, broad generalization. So I think in large part, the crypto lobby has forced politicians on both sides of the aisle to take a more thoughtful approach, to understand it is a source of innovation. I think there's been some very constructive thoughts or talks around things like central bank digital currencies, which, as you mentioned, the FIT Act, addresses kind of privacy issues there. And so I think, especially in anything that can happen in a bipartisan nature to kind of foster innovation as it relates to crypto is categorically going to be a good thing, not just for the ecosystem, but also for Americans. If you look at how many Americans own crypto, it's on the order of 70 million at this point. So again, that's something that, Congress can't ignore, irrespective of, which side of the political aisle they're on. So I think thoughtful regulation is good, regulation where the default is coming from a place of we need to foster innovation, we need to foster kind of thoughtful, clear regulatory guidelines for crypto participants, investors. I think all of that is good for the industry.
Going back to crypto ETFs, we just learned that VanEck filed an application for a spot Solana ETF. It's the first of its kind application in the US. What do you think is going to happen there? Do you think that will even get approved?
I think it's only a matter of time. I think the approval of the Ethereum ETF is a very kind of good step in that direction. Solana makes the most sense. After Ethereum, it's I think by far the most popular crypto, if you kind of put aside Binance token for now. And Solana too has started to take a lot of share away from Ethereum for scalability and high gas fee concerns. So Solana has really kind of demonstrated a very powerful use case, real time in the ecosystem. Developers love to build on Solana. I think it makes a lot of sense. VanEck has always been kind of very innovative in terms of bringing thoughtful exposures to market early. So I'm not surprised that they were the first ones to file. I remember having a conversation with Jan Van Eck back in 2012 about Bitcoin when it was on no one's radar. So, they have been steeped in crypto for a long time.
Do you think other asset managers will follow suit and file applications for spot Solana ETFs as well?
Yeah, I would think so. The potential audience is too big. It makes too much sense. Like I said, Solana has a very kind of unique value proposition within the crypto ecosystem. So I would have to imagine others would follow suit.
McMillan also discussed recent deals involving Bitcoin miners and how that's impacting markets. On top of that, he spoke about the intersection of AI and blockchain technologies, which have been getting a lot of buzz lately. Now, you'll be able to check out the full interview over at cnbc.com/cryptoworld. But as McMillan was just talking about there, ETFs have become a central story for the crypto industry this year, as they've helped crypto become more mainstream. Well, they've seen billions of dollars in inflows, and even BlackRock surpassed Grayscale's Bitcoin Trust as the largest spot Bitcoin ETF on the market. But even with billions under management, a lot of investment advisors are still waiting on the sidelines and haven't recommended these products to their clients. For more on spot Bitcoin ETFs, Crypto World's Tanea McKeel spoke with Chris King, founder and CEO of Eaglebrook Advisors, to find out whether high net worth advisors might be ready to change their tune.
It's been a little bit more than 6 months now since the launch of Bitcoin ETFs, and it looks like ETH ETFs are on their way as well. Your company is 5 years old, right?
That's correct. Yes, we launched in 2009.
Okay. So how has your business evolved over the past 5 years, and what does that reflect about the way advisors' view of crypto has changed in that time?
Yes, of course. So thanks for having me. So Eaglebrook is one of the largest separately managed account platforms in the digital asset market, and we primarily work with RIAs and financial advisors, helping them gain access to the market. And separately managed accounts, what that means as opposed to ETFs is that the clients are owning the assets directly in their name. So owning the Bitcoin, the Ethereum, the Solana, the other assets directly in their custodial account. So that's how we work with clients and what we've seen. We formally launched in March of 2021. And from there, we've onboarded over 70 RIAs. But our initial product in the market was a tax managed Bitcoin and Ethereum product. And that gained a lot of traction in 2021 when there was a lot of demand from advisors and high net worth clients where there wasn't an ETF. So that's where we built the business, and that's still a large part of our growing business because there are tax advantages to owning Bitcoin or Bitcoin and Ethereum in the separately managed account structure. As the Bitcoin ETF and Ethereum ETF is going to be launched imminently, what we've seen in terms of demand for the separately managed accounts outside of the direct ownership and tax piece, right? It's not just access, because you can access the Bitcoin and Ethereum in the ETF structure, which may be easier for some advisors. It might be easier to do it in a retirement account, is access to active and professional management. So in late 2022, we announced our partnership with Franklin Templeton and ARK Invest, and they run actively managed crypto strategies with coins more than just Bitcoin and Ethereum. And that's where a lot of our demand is now coming from. We're also partnered with Bitwise, who, we launched that partnership in 2023. And those are the three primary asset managers we've been working with.
As you said, Bitcoin ETFs did not exist when you started this business. And it is my assumption, and it looks like you work with many very crypto forward firms. What is the feedback that you're hearing on the ETFs? Are they liking Bitcoin ETFs versus other products or Bitcoin itself?
So what we found so we work with 800 advisors, and what we found from talking with them is some prefer the Bitcoin ETF, some prefer the direct route, the SMA route, but for different types of clients. So what we've seen kind of as a rule of thumb is if an advisor or client is investing $50,000 or less, or they're doing it in a retirement account like an IRA or 401k, in that structure, they would prefer the ETF because it's more point and click. But then for the higher net worth clients that are investing anywhere from 100,000 to 5 million, they prefer the SMA structure for one, getting access to things outside of Bitcoin and that automated tax loss harvesting piece, which is why a lot of these RIAs and wealth managers use SMAs in the traditional world, is because they really like that tax advantage and tax efficiency that comes with it. So that's I think what we've seen. But then I think more broadly, as a wealth management platform or an RIA, it's a little bit easier if you haven't done anything in the crypto space to approve a Bitcoin ETF, have your clients understand that, get some allocation, and then down the line say, okay, we've gotten our clients that want exposure to Bitcoin, but now we want an actively managed strategy, or we want access to Solana, or we want access to things outside of Bitcoin, or we want a more sophisticated tax managed SMA in the crypto space. That's when they then come to us and start working with us. So I think it's complementary, and I think it just depends on what the investors and client's objective is, and the advisor's job is to then steer their client into the right structure depending on those objectives.
Where do you think we are in the advisor adoption cycle? Like, it's only been 6 months, and these ETFs have been really successful so far. But, there are many people out there, not to plug our own story, but we have done quite a bit of reporting on this where we've talked to many advisors, and a whole lot of them don't like not just Bitcoin ETFs, but crypto in general for many, many reasons. Within the advisor community and the people that you work with, what are those discussions like? Where do you think that we are in that advisor adoption journey, and what and when do you think that that'll start to take a turn and pick up a little bit more?
Well, very few advisors have adopted digital assets as an allocation in their portfolios as part of their practice. And practically what we've seen is that it's very much so when clients ask about it, like they ask, hey, I want exposure to AI or I want exposure to Bitcoin. Maybe the advisor doesn't have that in their specific strategy or in their discretionary portfolios, but they want to accommodate their clients. So most of the assets that we've raised and the advisors that we work with, it's not an advisor saying, hey, all 100 clients, I think you should put 3% into Bitcoin or digital assets. It's the 20 to 25% of those 100 clients that say, hey, I want to allocate to this asset class. How do you think I should do it? So it's very reverse inquiry and driven by client demand. And that is what's going to drive advisor adoption. Because once they've done it for a few clients, they understand it. Then the next client that asks about it, or when they're having a quarterly or annual review, they can say, hey, I put 10 of the clients into this. Would you be interested in it? So that's really how this happens in practice. But because it's a new asset that's extremely volatile, very, very few advisors are, I would say, recommending it.
Okay, that's all we have for Crypto World this week. We'll be back again on Monday. We'll see you then.